Behind those brown boxes is something far more powerful. Stick with me. In the last 7 days, did you order something on Amazon? Maybe paper towels, a phone charger, a new book? Did you binge a show on Prime Video? Maybe you didn't even think about it. It was just automatic. Now here's what's wild. While you were clicking buy now, some of the sharpest professional investors on Wall Street were doing something very different. They weren't shopping, they were watching, obsessively. Because to them, Amazon isn't just a store, it's a signal, a barometer for the entire global economy. And they charge everyone else who shows up to sell. If you said online retail, you're right. Amazon's online stores division pulls in nearly $270 billion a year. That's more money than the GDP of most countries. But here's where it gets interesting. Revenue is not the same as profit. And this is the trap that most casual observers fall into. E-commerce, actually selling physical goods online, is an incredibly expensive, brutally low-margin business. You've got warehouses to run, workers to pay, delivery routes to manage, returns to process. The margins are thin, like really thin. A giant storefront designed to keep customers coming back, spending time, generating data, and feeding the real profit engines underneath. When you search running shoes on Amazon, most of what you see isn't Amazon selling you shoes. It's thousands of third-party sellers, small businesses, brands, manufacturers, all competing for your attention on Amazon's platform. And every single one of them pays Amazon a fee, a cut of every sale, fulfillment fees, storage fees, the whole thing. This division, third-party seller services, is where the real secret sauce lives. It's high margin, scalable, and it grows every time another seller joins the platform. Amazon built the infrastructure once and now gets paid forever by everyone who uses it. That's a completely different business model than retail. That's a platform business. They think of it as a cloud computing company that happens to run a massive online store on the side. The two businesses inside Amazon that are printing money, and most consumers have never even thought about. First up, Amazon Web Services, AWS. And if you've never heard of it, let me put it this way. There's a decent chance that the app you used to wake up this morning runs on AWS. Netflix does. Airbnb does. A massive chunk of the US government does. AWS is the world's largest cloud computing platform, commanding over 30% of the entire global market. Now, AWS is not the biggest piece of Amazon's total revenue. That's still the retail side. But it is the biggest contributor to operating profit, by a huge margin. We're talking margins in the high 30s, approaching 40%. 4 businesses in one stock. That's why investors are obsessed. One that most people overlook entirely, and I'm calling it the quiet catalyst. Amazon Advertising. Think about it. When you search for something on Amazon, some of those top results are paid placements. Brands are paying Amazon for that premium real estate. And because Amazon knows exactly what you've searched for, what you've bought, how much you spend, the targeting is incredibly precise. More precise than almost anywhere else on the internet. Amazon's advertising business is growing at 22 to 24% per year. It's now a bigger business than YouTube's ad revenue. It tells you that enterprise customers aren't walking away from AWS. They're going deeper. 3 words. Artificial intelligence spending. Amazon is in the middle of a spending binge, unlike anything we've seen from them before. We're talking tens of billions of dollars in capital expenditure, building out AI infrastructure, new data centers, custom AI chips, and doubling down on AWS's AI capabilities. The scale of this investment is jaw-dropping. Now, investors have complicated feelings about this. On one hand, they're nervous. All that spending means short-term profits take a hit. The money has to come from somewhere. On the other hand, if Amazon gets AI right, if AWS becomes the preferred platform for businesses building AI tools and applications, the long-term payoff could be enormous. We're talking about being the backbone of the next era of the internet. It could pay off spectacularly. Or it could be a massive waste of capital if the AI build-out slows or competitors leapfrog them. The market is watching every earnings report for signs of which direction it's going. What that means is that a stock that used to cost thousands of dollars per share is now accessible to everyday retail investors for a fraction of that. It didn't change the underlying value of the company, but it changed who could participate. Regular people, not just institutions and billionaires, can now own a piece of AMZN. And that matters for how the stock behaves. Now, I wouldn't be doing my job if I only gave you the bull case. Let's talk about the risks, because there are real ones. First, regulatory pressure. Being the everything store makes you a target. Amazon faces antitrust scrutiny from the US government, the European Union, and regulators around the world. We drop new financial breakdowns every week. I'll see you in the next one. Amazon isn't just a stock. It's a bet on the entire future of the internet, on cloud computing, on AI, and on global consumer spending. The retail business is the storefront. The real money is in the platform, the cloud, and the ads. And right now, Amazon is making the biggest infrastructure bet of its existence. That's why it's a barometer. When you understand Amazon, you understand a huge piece of how the modern economy actually works. Which brings me to the question I want to leave you with. Every time you open that Amazon app or log into Prime Video, are you a customer or are you an owner? Because those are two very different relationships with the same company. Drop AMZN in the comments if you think they hit $300 by 2027. I want to see where everyone stands. And if you want more breakdowns like this on the stocks that actually move the market and the business models behind them, make sure you like this video and subscribe.